Hello everyone, we're going to be looking at WEED, APH, ACB, CRON, EMH, and then we'll go to the US sector, look at some IIPR, GWPH, and then there's an IPO upcoming on the NASDAQ, although that is not the US sector, it is a BC-based company, but it's only going to be listing on the NASDAQ and not in Canada, which is interesting, but we'll take a look at that at the end. So we're going to start on the weekly time frames for longer-term swing traders on what to be looking for, and then we're going to zoom in. Personally, on the shorter-term daily time frames, we are in a downtrend, and whenever we're in a trend, I look for the opposing side to have to prove something. So right now, the bears have the short-term control, and it's up to the bulls to prove to me that they're shifting the momentum back in their favor. So until they do that, I'm going to be playing more cautiously, and I'm going to be a lot more protective. So I've played Canadian MJ a lot less, played it bearish a couple times in the past 2 weeks, but not significantly, no significant gains there because we haven't been dumping. It's just been a slow, steady grind to the downside. And the psychology behind that is that people are looking for potentially a little bit of a summer lull before we head into, I think September and October is when things are going to start heating back up as we get towards the first date of sales. And I think there's going to be a lot of media coverage around that. So I would look for September for the bulls to start showing up to be pricing that in to a certain degree. And until then, it's going to be up to individual news events, which haven't really had a huge impact. There hasn't been any groundbreaking news, but these MOUs or these supply deals not really doing a whole lot to move the needle. And also the correlation to the S&P 500 has faded a lot, whereas the S&P 500 shown a lot of strength in the last 2 weeks, and we're not seeing that have much of a bullish effect on WEED and these major names. Although you could say, maybe they would have pulled back harder had the S&P 500 been bearish. That's all speculation. So weekly time frame for WEED, we just had an inside bar bear break, which again tells us that the bears are in control of the short term. So on the weekly time frame, the uptrend is still intact as far as I'm concerned until 33.76 breaks. So at this point, that is our level of support, and we've been holding it for quite some time. So we had a bull move, we broke resistance, we pulled back, established that little base of support, and then saw our new all-time high. Now we're pulling back, and we're still in the same period of pullback. We haven't seen the bulls show up since that all-time high on this weekly chart. So if we look at the daily chart, the resistance levels are very clear. And when I say the bulls have to prove something to me, I need to see a break of levels. I don't need to see support holding. That's a good sign. But in order for the bulls to truly prove something, they have to hold support as well as break resistance and shift that momentum and shift that trend. So we have the all-time high, the low of the dump, the lower high. This bounce was nowhere near as strong as I would have anticipated it to be. Well, I guess it was pretty close. I was looking for a 10% bounce off the bottom conservatively, and we did just get that. But I would have expected this bounce to make it back to about $43, $44 up here, just if we were looking for the standard healthy equilibrium. So the fact that we did not get any follow through and we did not see a confirmation candlestick of this reversal shifts the momentum towards those bears in the short term. So then we pulled back, we established a low, lower high, higher low, lower high, and then we did make a bear break here where we lost a couple support levels. And again, we were saved by some news where WEED came out saying that they're going to be on Kramer later that day on CNBC, and that exposure was a nice trade. And I flipped that momentum as soon as that news came out and I saw the bulls turn around and break the high of the day. I got in. Didn't swing that trade overnight because I was looking at other things, but we'll look at how that has been a successful trade 2 out of 2 times where bulls buy into the end of the day. And there was actually a nice opportunity where people sold off, but holding into the end of the day, waiting for that news segment to come on, and then selling the next morning into that little bit of hype. So we faded back down on that gap up open after the hype, and now we're looking at a couple support levels, 37.20, and if we break 37.20, we're back down to 36.17. As far as resistance levels go, let's look at the 4-hour time frame just because they're more clear. We have the high of the initial bounce, 41, our lower high is 40.20, and our lower high is 40.06. So here's where we had our news reaction. We were dumping down. The bears were in absolute full control, and we saw a V-shaped recovery. So let's go in even further to the hourly time frame. So all-out dump, oversold conditions, news comes out, significant bounce. So flipped it here. Then we saw a little bit of a sell-off into the end of the day, but then the gap up open and all profit taking from the gap up open. So that's worth noting that if we get this kind of scenario again, to potentially short the open, because people in Canada don't have the possibility to trade after hours, and to get that gap up open, you're going to see some people take profit on that. So we saw a lot of profit taking, and what I'm watching in terms of what I'm going to be looking for this coming week to start the week, hourly RSI hitting 30 and bouncing twice now. Very weak bounce at this point at the end of the day. I am expecting potential further downside, but the first thing I'm going to be looking for on Monday is, can the bulls hold these support levels, either 37.50 or 37.20, and form a 4-hour equilibrium? Because you can see our low, high of the bounce, and now this is a higher low. If we can hold that 37.20 level, and we'll look to see if the bulls can make their way back up to the $39 range or so and give us a nice tightening 4-hour equilibrium to be looking for. If we get a break of 37.50 and 37.20 first thing, that tells us the bears are still in full control, and I would patiently wait. Personally, I'm going to wait until the RSI on the hourly is in the mid-20s before I would start seeing some aggressive buying if we do break these support levels. But again, if these support levels hold, might be looking to initiate a bullish position and have a stop loss level in the low 37s and try and get that move back to 39. So I'm going to be watching very close. What does the first half hour of trading look like on Monday? And can the bulls hold these support levels? So I do believe that the correlation of the entire sector is going to depend on what WEED does here, and if this bounce gets follow through to see these other name bounce as well. So APH on the weekly time frame, still very strong overall. Well, I shouldn't say strong, but still holding on just fine to its support levels. So right now, the low of consolidation and the level I highlighted last week as the must-hold level in the short term is 11.25. Then we held 11.31, and now we held 11.45. So we're still grinding these little higher lows. We're just not seeing much bullish follow-through, and we're still within striking distance of the bears to take out these supports. So we're not very comfortable as bulls, but we're not breaking support. So the bulls do still have this daily little uptrend. So I'm watching 11.45 and 11.55 as the two short-term support levels. And you can see here the daily chart is just lower highs. We see the pullback, we rejected from 12.45, then we rejected from 12.22. So there's just a clear lower high pattern with clear higher lows as well, and the range is tightening. And at this point, I would say 11.55 break is bearish and a 12.22 break is bullish. And obviously the bears have this momentum, but if WEED holds that support Monday first thing and bounces, I'm going to be looking for the bulls to hold 11.55 and continue to tighten the daily range as well. You can see the volume is dropping off as the pullback is occurring, so that's a good sign for the bulls. Increasing bear volume would be a red flag, and we did see a tiny bit of increasing bear volume, but not very notable. So there's no major red flags on the size of the pullback we're seeing, and that's why these weekly uptrends are still intact. If we lose these weekly uptrends, that's when we're going to expect to see a spike in bear volume and increasing bear volume. So shorter term time frames for APH, I would actually look at the daily. Daily's got the most clear levels. So 11.55 to 12.22. ACB on the weekly time frame is pulling back, and I would say at this point we haven't really lost a higher low pattern because we have our low here and a higher low is at 717, and I would say another little higher low is here at 793. But this move was all one little bull move, just a little sideways consolidation before we hit our top at 1072, and now we've been pulling back since then. But again, no huge bear volume, no red flags. If we lose 793, that's when it's going to start shifting this weekly momentum on ACB back towards those bears. Obviously, it's been a very bearish week. It was red every single day, and it was red Thursday and Friday as well. So that's 7 red days in a row. And just look at the last 3 weeks of trading since we hit this top and since this hype died down a bit, 2 green days. So that's literally 5, 10, 15 days, and 13 of them have been red. So very clearly momentum has shifted, and this break of support on the daily was notable when 875 broke. And that's when the increasing bear volume occurred here on the daily time frame for ACB. So just looking at the comparison of the 3 that we've looked at so far, ACB is clearly the weakest of those names. And we look at the 4-hour chart, the RSI is very oversold. So here's another one to be looking for an oversold bounce potentially on Monday. If 854 breaks and we see another little leg down, this 4-hour RSI is going to be down at 20, and the hourly RSI at that point will be down under 20. So let's see if we can get a potential oversold bounce play, and that's really what we're setting up for this coming week. Oversold bounce plays on the hourly and 4-hour time frame. My attention will be on ACB, and WED obviously is the sector leader, and I'm also going to be watching EMH, which we'll look at in just a moment. But as of right now, ACB oversold bounce watch on Monday. First things first, can the bulls hold 854? If they can, that gives us a nice clear stop level to use on a bounce attempt. And if we cannot hold that level, we have to be more cautious. And anybody making any entries for oversold bounces should be scaling in and give themselves some wiggle room in terms of, 2-3 positions at least, and have some space in between them. So if things do get to extreme levels, that you're not sitting there just holding the bag waiting for the oversold bounce with no cash to average down. The only time I'm going to average down is at extreme RSI levels, and if this 4-hour RSI gets down into the teens, that's what I would call extreme. Cron on the weekly still holding up as well. New higher low is very clear for the bulls to maintain, and that's at 815. So 815 is now the most important support to hold the uptrend on the weekly time frame. And if we look at the daily chart, bulls have been holding on pretty well. We've been holding on with higher lows. You can see it's pretty much inverse to what ACB is doing. And I would say just in the last week of action that Cron is the most bullish out of these four. It's still not proving a whole lot and giving us a ton of bull confidence, but it is still holding higher lows. So I'm looking at 888 and 896 as two support levels with resistance of 945. I don't like any bullish entries here because, again, not much follow through. And whenever we do get these little bull breaks, they lead to profit taking. And whenever we get bear breaks, it leads to bulls buying the dip. So it's a bit of indecision here is what I'm seeing. But I wouldn't be surprised to see our low, high, and to set a lower high somewhere in the near future and then pull back into the mid $8 range to see this range continue to tighten in terms of just the amount of space that we have between this 4-day big bull move and then big dump. So I would be watching for a loss of 896 to shift the daily momentum back to the bears. But at this point, it is the only daily chart of the four we've looked at that does still have bullish momentum. So this is a scenario where I would say the bears need to prove themselves on the daily chart, where that is not the case for ACB, APH, nor WEED. EMH is in absolute free fall. So this is an example of the bulls in these major names that we just looked at breathing a sigh of relief and not seeing this huge bear volume spike and falling back down with a huge dump. So this week, we closed last week at 358, and here we are at 257. So about a 30% drop in 1 week. Obviously, that's huge. And why are we seeing this much downside? Sure, fundamentals absolutely has a reason to do with it, but look at the lack of support. We shot up hundreds and hundreds of percent. You know, we went about 500%, and here we are falling back because we did not establish support, and the big red flag was the break of this support level at 369. Because once that broke, that was the low of consolidation breaking. There's no support nearby, and you can see the bears are just absolutely running with it. But I like it for an oversold bounce watch. I'm going to be aggressively watching EMH on Monday and Tuesday, and I'm going to be building a position. And in my opinion, I'm going to be looking for a correlation for EMH to bounce when WEED sees an hourly oversold bounce, but for the percentage gains to be bigger on EMH, which is why I'm going to trade it. That being said, I'm trading EMHTF. The volume and the liquidity and the bid and ask spread is not as tight as these major NASDAQ listed names like CGC. So I take a smaller position. Whereas if I'm taking a CGC position, a normal position for me, my EMH plan for this coming week is if I'm building a position on this oversold bounce as I plan to, it's a full position for me will be about 2/3 the size of a full position of WEED in terms of dollar value. And that's just to protect me a little bit because it's not as liquid and it is a little bit higher risk, high reward of a trade. So I'm not going to be playing it as aggressive. But like I said, I am going to be playing it aggressive. And the reason for that, the weekly RSI is approaching oversold. It's down at 35. But look at this daily RSI down in the teens. It's down at 20 right now. And if we drop down and break 256, which I anticipate on Monday because we closed at the low of the day on huge bear volume, this is the most bear volume that we've seen in months and months. And I'm looking for a volume climax to signal the bottom and a bullish reversal candlestick. I would be shocked if it doesn't form on Monday. I think the odds are pretty high for that to happen. If it doesn't happen, then I'm going to be looking Tuesday, but I am going to be very protective. So here's an example where I attempted to play the bounce on Friday, and what I mean by being protective. So here on this low of the day, I actually had an EMHTF position, a bid set for my first of 4 scaling in positions at 201. And I left it there because I said, if the price gets down to here, we're going to see a 10% down day after seeing, you know, day after day of red. And I knew what the RSI levels were. So I was comfortable with that being my first initial position on an entry. Because when the oversold bounce gets going, we're going to be conservatively looking for 10 to 20% from the low of the dump to where the high of the bounce does occur. I would say 10 to 15%, just because we're in a different market environment. We're not in as raging bullish of a market environment that we've seen in the previous recent past. So I'm going to be a little bit more aggressive with profit taking on the bounce because of that fact. But let's get into what I was doing. I had my order at 201. About 5% of my order filled, and then we saw this little weak bounce. So as soon as that happened, and as soon as I saw the price fade back to the low of the day at the end of the day, I pulled my bid because I don't want to get filled with bearish momentum at the end of the day, because that tells me we're likely to see at the least a little flush down first thing Monday. Even if the bulls do start to buy Monday to get this bounce going, I expect to see a little quick flush first. If the bulls can hold 256 and we see the bulls start to bounce, that will be our support level to use as a potential stop loss. But again, I'm going to be entering 3 to 4 positions. And if we see another leg down on Monday, that's when I'm going to start establishing these positions. And at this point on EMHTF, again, this is the US ticker, I'm going to be looking to be very protective. So let's say my first order is at let's say 188 on Monday. Then my next order will be 178 and then 168. And I don't anticipate to drop down that far at all. But my strategy would be to scale into the downside. And if the bounce starts going and it's high volume and bulls buying the dip and it's very clear that the short-term momentum is shifted, I would then market buy maybe one or two positions or whatever I have left to top off my position size and then begin to scale out on the oversold bounce as I see fit. Always being protective. So if I have 4 positions and let's say my average were at, $2, I'm going to take my first position profit at 210 because that's a solid 5% move and that's only 1 out of 4 positions that I have, and that gives me a lot more wiggle room before my break-even level if I lock in 5% on that one position. So that's my game plan and my trading style. I love oversold bounces. Have to be cautious because things can get extreme, but things are already extreme on this name. The one way that I can see things getting to the very much extreme levels would be if WEED sees a dump and its hourly RSI drops down into the low 20s. That's where I would be watching. And I'm also going to be looking to play ACB and WED potentially. So I'm going to be focusing on Canadian MJ pretty hard to start this next coming week with ACB and EMH at the top of the list for those oversold bounces, keeping in mind that WEED needs to bounce for these names to get significant follow through. US side of things, IIPR, the weekly time frame is on the verge of losing the uptrend. So we have our all-time high, the low of the pullback after that all-time high, a lower high, and we're close to a lower low if 34.17 breaks. So I'm currently all cash. I don't have any USMJ positions, but I'm watching this daily chart, and the first red flag was 35.08 breaking, and this would be the second red flag, and the next support level would be down at 32.55 after 34.17. So I'm going to be patiently waiting and keeping an eye on things, but the bulls aren't showing me anything. We're seeing some consolidation 5 out of the last 6 weeks. So I'm going to be patiently waiting, and we'll keep an eye out for opportunity, but I don't see anything for the bulls in the near-term future on IIPR. GWPH, I'm watching for a weekly equilibrium to form, and I'll play the weekly equilibrium break potentially once we get it. So I don't want to trade while we're within a tightening range, but we have our high, the all-time high, the low of the dump, which was a significant dump where we pulled back almost 20%, about 18%. So I'm going to be looking for a lower high on this bounce. We closed very strong at the end of the week with a big bull day on Friday. So we're going to be looking for a lower high to be set in perhaps the mid 150s, and then I would look to pull back and form a higher low compared to 130. So I can see this equilibrium on the weekly taking another month to 6 weeks to play out potentially unless there's news involved. So I'm going to sit back and just know that this is a tightening pattern I want to keep an eye on, check on it maybe a couple times every week, and just know that in the future it's going to be a potential trade setup to keep an eye on. So here's the IPO. Tilray IPO on NASDAQ potentially this week. They don't have the exact date set yet, but we're looking at maybe the end of this week to be watching for that IPO. It's going to be on the NASDAQ. It's not a profitable company, so it reported a net loss. Not many, we have to keep in mind that obviously the doors haven't opened for recreational sales, and that's going to turn around a lot of these companies' financial statements as to whether or not they are profitable. But I'm just watching to see if there's hype and whether or not, this listing is big, because we've seen it have major impacts on WED with CGC and Cron as well. So just keeping an eye out, because when there's a new IPO, there's no price history, and it's a very high risk, high reward, big time mover. So if the bulls show up, we can easily see huge gains. And if the bears show up, we can easily see a dump. But let's just look at an example of a recent IPO. This is in the trucking sector. It has nothing to do with MJ, but here's the IPO listing. We absolutely dump and pull back about 20-25%, and then we see a 50% bounce in a week and a half. So the volatility is there, and that's why I like to keep an eye on IPOs, because of the volatility and the potential trading opportunity. So especially in the MJ sector, going to be watching for that towards the end of the week, and we'll keep an eye on Tilray on the NASDAQ. And then we're going to have some nice NASDAQ ETFs showing up, or not NASDAQ, but US ETFs covering these major names. I'm keeping an eye on ETFs, and I'm keeping an eye on leveraged ETFs for further trading opportunity as we continue to watch this sector develop and continue to watch the US side of things get more and more involved. So I appreciate you all watching. Hope you have a good rest of your weekend. Again, if you're going to try and play these oversold bounces, I absolutely suggest paper trading to get comfortable with them, because they're one of the harder plays to make as a newer trader, and they're my favorite kind of play, and that's just because I've done them hundreds and hundreds of times. So have a good day.